Yo, guys, how we doing? Boom, we're live. Hello, hello, hello. Let me know you're here. Should have this stupid chat box working. I'm not really sure. But I'll give it a couple of minutes. Well, I won't give it a couple of minutes, but I'll let it just build for a second, see who's here. And I'm going to apologize in advance because I have been sick since like Wednesday, maybe Tuesday last week. And I'm going to do my best not to cough and create a lot of problems. But the video that I put out this morning, my God, it took so long to record because I do them in the morning, right? And normally the morning is like the hardest part when you're sick because you've got like loads of mucus and whatnot without getting too gross. And today, as I've been using my voice, I'm still coughing. So I'm going to try and not make it like a disgusting thing for you. So if I keep pausing the mic, that's going to be why. And I need to do it now, actually. All right, we'll see how this goes. Who's here? I just need to open up a window just to see the X chat. LFG YOLO's here. Hey, how you doing, Matt? I'm doing okay, thanks. Although I think that introduction probably would just tell you how I'm doing. I'm feeling better, but yeah, I was like super rough the other day. Super, super rough. Last time I was this sick it was probably like 2-3 years ago. Yeah, it was about 2.5 years ago when I went to the Philippines. And we touched down in the Philippines after like a 28-hour traveling. And then basically spent the entire like 2 weeks just traveling in a car and AC, going out into the heat, seeing some sights, jumping back into the car and AC, and like getting very little sleep. And I came back with like, it felt like my brain was full of snot. And then when I came back, it just all drained out of me and I was sick for like 2 weeks. But I've not felt that way since then. I'm normally quite good at keeping myself healthy. How are you? So yeah, it's been a bit of an annoying time because the missus was sick. She had an infected tooth. The boy's been sick. I've not been able to get to the gym for like 2-3 weeks. I think I've got to the gym twice in 3 weeks, just running around doing stuff for the family. And then they all started settling down. Then I got sick, and now we've got this heat wave as well. And I've been like, oh, I wanted this heat wave because I wanted to get down to the beach more. But there we go. Let's see. Right. So on the agenda tonight, going to be talking about Bitcoin, Ethereum, Solana, hyperliquid. We're going to do market review. Going to be doing trade plans for them. Obviously, I put the video out this morning and got into a little bit of detail about what I was looking for, but we're going to go into it into a little bit more depth. Also, like everyone's getting super bullish again. Like this is all we've done. We're like back at the prices that we were at on Saturday. Not even like just like this whole reach. Everyone's getting super bullish, and I understand that because Solana has pumped, but obviously big people in the crypto space have been launching coins on Solana, and I'm sure that's all kosher, and I'm sure that's all completely by the book and completely normal, and yeah, no problems whatsoever. But people have heroes in crypto. They keep making people super famous. They get rugged by those people, and then they like make excuses for them, and then they just do it again. And I just don't understand. It's always been that way. People keep getting scammed by people, and then they just make excuses for them, and then they just get scammed again and again and again. It's crazy. I don't understand it, but that's why they keep doing it. It's because everyone lets them. But yeah, we'll talk about that. And then I'm going to do any chart requests. So if you guys want me to look at any charts you're looking at, or do a Q&A as well, charts and Q&A for the second part, we'll do that. And then the third section, I'm going to be teaching how to draw supply and demand zones. Even though I've got this on my YouTube channel, and even though I've also got it on Kraken's YouTube channel, the full course is now up on their channel. Kraken Crypto Exchange is their YouTube channel, and the full 5-part series should be all live now tonight. The 5th part should be going live tonight, and that will take you literally from knowing nothing about price action, or you have to have some trading knowledge, right? But going from a beginner with price action trading all the way to like an advanced concepts and putting it all together. And I believe it is the all you'll need. All those concepts are all you'll need in order to create a strategy. Create a strategy with price action that you can go away and consistently replicate and be profitable with. Of course, you're going to need lots and lots of reps, and you're going to have to figure out a lot of stuff. But I'm giving the foundation using my years of trading with it and nuances and certain ways that you probably you wouldn't have heard elsewhere because it's all coming from my experience. It's not coming from like the typical, oh yeah, this is supply and demand, and this is like go and buy it for $500, my course. Like I've covered all the foundational stuff, but I've also added nuanced stuff in it. So even though it's all on YouTube, I'm going to cover some of the stuff on here just because I keep getting loads of questions about how I draw my levels. So I'm going to cover that in that section. And then the last section is a section which I've forgotten. Let me just double check that. I don't know which one I've actually put here. Let's go. There we go. I'm on the wrong thing. And then the last section is occupying yourself when there are no trades. So that's going to be a good one as well, because it's quite a important topic at the moment. Ah, yes, the fatigue catches up. Take care of this. Thank you. Is exactly where it was before the weekend. Near. Yep, that'll be a CRV. Yep. Okay, cool. Got some questions coming in. Yeah, no, cool. Well, we'll cover those in section 2, but let's jump straight into it. Get into what's going on in the markets, and then we'll get into the questions and stuff. But if you've got stuff, just keep them coming, then I can get to them afterwards. And again, I'm really sorry for any coughing, but I can't help it. I'm trying to stay consistent with everything I'm doing. So I'd rather do it and push through awkwardly than not do anything at all. All right, so Bitcoin on H4. I mean, if you go on the timeline, everyone's like acting as if it's made a higher high and is above 70K. It isn't. It's still at the range lows that we put in beginning of February. It's taken out those lows and it's going sideways. So here is one of the concepts which I've been teaching, which again is something you don't hear pretty much ever, is decision points. The key areas where buying or selling took place to break a barrier. In this case, it's a support barrier. It's the range low. And these levels are usually key areas where price retraces to after taking out big lows or big highs. And if you go back across any other charts, you'll see that. Like you can go and look at yourself. The level where the impulse was created to break that high or low, price tends to gravitate back towards them, and they're great reversal points to continue that trend. So here on H4, as I said in my video this morning, we had a bit of a range that we've been in since Friday, but it hasn't gone anywhere. If we wanted it, sorry, if it was going to go, it was going to go here on last night. And I put a small position on hoping it was going to drop in the morning, and I saw it hadn't. I was like, okay. So we're likely to be coming back up to this point. This is the key area, 62.8K. This is where the sell-off created these lows. And what it's going to do is that, if it's going to go, right? And you can see examples of it. Let's say here, for example. So we had that previous low. If I just zoom out so you can see it. This is where price comes down and then the buying kicks in to put this entire swing up. We come all the way back down to it. And if you've been following what I've been saying, it was actually down there. This was the origin of this entire trend up. And you can see where's the decision point where the selling took place to break that low. And we have it right next to it in this instance. So we can see this is where the impulse created this low here. This is where the decision was made to break this barrier. And price comes down, creates a new low, and retraces all the way back up to it before creating a new low. So in the same concept, we have this impulse, which is where we came out and taken this low out. It was wicked before here, so I would say this really is a fake out before it comes up. But this time we've now closed below it. So this is a key area. So if we're looking for shorts, which I am, I'm looking for it to come back up here and then send it back down, essentially. So sellers are still in control. You should be able to see that on the chart. But people, again, are kind of acting as if we've definitely found a bottom. This is the Pico bottom now, and it's only up from here. I can't see that. If you reverse it, if we invert it rather, you can see, right, it's taken out, let's say this is a high over here. If it doesn't continue, it needs to come back down and reload. And this is exactly where I'll be looking for it to reload to head back higher. It's like a perfect level. So if I get that level, it's a great area to look to short. On the hourly time frame today, as I said in my video, it's not the cleanest of ranges. Price action since we've taken out this low has been really scrappy. And it's hard to say like what is the range low or what's the range high, but just kind of eyeballing it, I'm just saying like this is where price is kind of moving around within, and it's putting in a similar structure to this little part here. My God. So what I mean by that is it's come down, puts in a high, tries to go, and then puts in a higher high. We're kind of on a bigger scale, down, up, down, tries to go, and is now in the process of putting that higher high in potentially. And if it does, where's it going to go to find the next liquidity? Probably up here. This is the deeper level. This is a continuation level, so it might happen around this point as well. So it's worth marking this on your charts. But that's a nice little high to also look at. So I'm essentially going to be looking for exhaustion either here or here in the form of a range where price is going to go sideways and then it's just going to break down to the downside. It might fake up and then go down, something like that. But if you go to previous examples, you'll be able to see what I'm talking about. So here we have I need a cough button. We have the range sort of here, and you can see how that ends up being the map for what happens, and then it eventually breaks down, tests the high, and then breaks down, comes all the way back up to test that range, and then drops. So I'll be looking for similar sort of price action. That's kind of like a B grade, C grade level. Something similar as a top around here, and then to sell it back down. A better looking reversal, if I'm just trying to find something, probably up here, even though it's not like the greatest in terms of looking exactly like where we are. We have an impulse up, we retrace down to put this low in, and then it comes back up to test the high where price retraced before that low. So that's your range, and we'll get back into that in section 3, just about how I draw these. So we have a range like that, and you can see it fakes the highs, comes back down, hits the high, comes back down, fakes the high, wicks the high, and then closes back down strong. So I'll just be looking for, we might have a bit more of a bigger swing like that. If we say price is here at the moment, for example, we might have a bigger swing, and then I just want to see price do this kind of sideways price action. If it gives in like a big hint like that, where it looks to push up and then gets rejected back down and creates a lower low, perfect. Like it's a really clean signal, right? So I'm just going to be looking for that to happen either at this point, or somewhere in between. The deepest retrace level, in my opinion, we might have to go down to M30. Yeah, we have like an area of compression before the sell-off and before the impulse. And I like these areas because you kind of get a bit of a channel and then an impulse down or on the way up, like so. It's just kind of more like a diagonal range, right? So it's either going to hit the extreme of this point there, or it's going to hit where the sell-off impulse down out of the compression to create the lower low. This is where that sell-off was created. So even though I like this level mostly at 63,000, there are a couple of levels above it where I still feel like it could be, if we're going to come up, an area where we can look for exhaustion. So my particular style is I don't like to fade the trend. I used to love it, but nowadays I just I'd rather sit out or maybe take a smaller position as a sort of hedge, thinking that it's going to go up. But I don't trust moves as much against the trend. And when I'm in a position, let's say, for example, I'm long now, or let's say, I mean, this is actually a really clean breakout, what we're seeing. So I would probably be happy to take one. But for the sake of the example, let's say you've seen this candle here, this green blue candle that basically looked like it was going to go south and then close as a higher high above the range. Let's say ignore the wick, and let's say maybe it closed up here, or even like where we are now. If I took a long here and then this suddenly comes back down into the range, I'm probably going to puke my position, because I'm like, well, we're in a downtrend. Sellers are still in control, and it's tried to push up, and it's come like for many times. 1, 2, 3, 4, 5 here, 6, 7. And if it comes back down now, I'm like, right, I probably should have aligned with my initial bias to the downside and then stuck with the downtrend. So I get less confident, and I take lots of silly losses because I'll puke positions. So I've just learned what's better for me is to wait for a retrace to a key level, which is in line with the trend, right? So at this area or at this area is basically ideal for me. That's not to say that you can't go long, because if we go down to M15, right, we might see a really nice continuation range here form on the top of this range, and then you might see it break out and head up. So you can absolutely take longs. I've been saying that on other streams. Even though I am bearish, even though like I'm looking for shorts, you can still go long, right? It all depends on your style. Like lots of people, and this is actually something like, right? So if we have, I'm going to draw this, a level like this, right? And we come up and then we drop hard, people buy this point, right? Because they're expecting it to go back up, because it's taken out all the lows and it looks like a sweep, a liquidity sweep, fake out, or whatever you want to call it, and then higher prices. But the thing is, people get used to that because we get 3 years of up only in crypto. When you get a downtrend and then you take out lows like this, and then it comes back above, people start thinking super bullish, right? It's come up, it's swept the lows, blah, blah, blah. But usually it's just going to retrace to reload and then come back lower, which is why most people lose a lot of their profits from the bull market, because they're taking this strategy, which they've used in an uptrend, like savage uptrends. They've taken this strategy and applied it to a downtrend, and what is typically a savage downtrend in crypto. So that's why I prefer to align with the trend, right? So that's my level. So if you want to go long, technically, like this is looking good for a long, because look how many times it's tried to break down. 1, 2, 3, 4, 5, 6, if you count the wicks, and then 7, 8, and now it's pushing up above the high of the range. So it looks like it's going to come up. I just don't trust how far I can go. I think the risk reward is better here for longs, because for a continuation, it really should have been going there, but it didn't. So if it doesn't come up to these levels, I'm happy for it to eventually take out the range lows and then continue down to where I'm looking to basically close all of my trades. I've still got open all of my shorts from 110k, 97k, 82k, and little places in between, even like 67k. I'll be looking to close that because what we're seeing now, the volume is getting lower and it's getting more challenging for continuation through levels. Whereas if we look a little bit earlier in the trend, right? Where are we here? This is 82k. Takes the levels out, and even though it ranges, it puts in quite clean looking price action. Like this was actually, for example, a really nice area. You can read this price action cleanly. Again, takes out the lows here. You can read this really nicely. But where we're at the moment on the chart, oh shit, what did I do there? This is really scrappy. So the risk reward is getting worse for shorts. Every time we break the barrier, we're getting quite strong retraces to the upside. So we're getting into areas where there is a lot of buying liquidity and a lot of buying interest. So I'd rather see a deeper retrace to get one more impulse down. But the closer we get down to this point at about 50k, we are down 60 odd %. I don't want to be shorting down below that after if we reach down there, which I'm confident we will, because the risk reward is not going to be there. You're going to get a lot more fuckery. You're going to get a lot more low volume. You're going to get a lot more like spikes to the downside and then wicking right back up. So from down below 50k, let's say for argument's sake it's going to 40k, down below 50k, I'm basically in accumulation mode then. I'm going into bull mode. I'm going into a point where I want to start building for the next bull market, rather than looking to squeeze like that extra 5% on a chart drop that I just think is too stressful. So I am looking for things to go further than 50k, really. I do think the chart supports it. But I don't want to be involved in shorts below that point. I think this is a really nice area to look, and a really big number to look to basically close all my bearish trades. So I am bearish still. I've been bearish since October. I've been selling since October. I've been telling everyone to short since October. And I've been shorting at all the big highs where everyone's been getting super bullish, like this point here, 82k. And then again, it even happened last week at 67k. When all we did really was come back into the deepest compression level. But again, you can see the difference in the sell-off, just savage, compared to very staggered sort of price action. And it has been moving very efficiently. I've been saying this to the subscribers, and I've been saying this to some of my mates like XO and Tyler, that this has been trading really efficiently. If I just draw a few lines, you'll see what I mean, right? So the top one, sort of, you take that low before the high, and you can see drops through it, uses it as an SR flip. And then you take this low before the high that gets broken through it, boom, uses as an SR flip. Here is that as well, like breaks the low, and then you've got this retrace, pushes up into there, drops through it, and then has been bouncing off of it, right? So it's trading efficiently, but it's not like a really savage sell-off. Like the interest is dying in shorts, but still there. We're coming into sort of like the 9-month mark now, where we had the top. Typically the cycles sort of start to find a bottom around the next couple of months. So yeah, I am still short. I am still looking for shorts, but one more impulse to the downside, and I think that's it. I think that's when the bottom will be in, once we've had one more leg down. Because another thing, and I was speaking to Tyler about this as well, I actually excluded this from my video this morning. I wish I had put it, but I didn't want to make it too long, was that I think it's too easy to call a bottom at the moment. I think a lot of people are looking at the fact that, yeah, it's taken out this big low and it hasn't just continued, so therefore we must be bottoming. And then you see other coins like Solana, which hasn't got any impact really on Bitcoin, you see that as a narrative of, oh, okay, maybe we get alt season, which means we're at a bottom. I don't see that as the case just yet. But I can definitely see a case where we come back up and retrace into a pretty deep level. And this is a fresh level here at 63. Yeah, at 63K. This is a fresh level where I'd love to short that back down and have that one more impulse. And that one more impulse will just probably confirm to the market that we've hit a bottom, because then on a higher time frame, would have had, since the top here, would have had one impulse, two impulses, and then a third impulse down. I mean, you could probably count this one, but it hasn't taken anything out yet. So this is more just, I wouldn't call that the impulse out, just one more impulse. Even if it's just down to 50K, that's still, you can see the legs down are getting smaller. But bottoms aren't formed when you've got more than half the market calling for it and saying that they're buying. It's never really happened. And if you've been here for multiple cycles, you'll know that it kind of comes in stages where people call for higher lows, especially the big accounts, right? They call for higher lows here, all the way down. And then they call for the bottom. Remember how bullish everyone was here. And they call for the bottoms at these points, and then it comes down again. And then it's like, right now we're at a big support area. We haven't been able to break through it just yet. So we must be at Pico bottom. And they just never really get it right. And the way that I've always seen it, and you should take notes here, is that what will happen, let's say it does impulse down, everyone is too confident here. If it impulses down one more time, people, especially if it goes below 50K, people start saying it's got no value now. Why would anyone have this? This is shit. This is just going way lower. Because every time that I've called a bottom, remember what people have in their minds is every time they've called a bottom, they've been wrong. Like multiple times, like along the way down. So at this point, once they've had that kind of muscle memory saying like, yeah, I keep calling for a bottom, I keep getting it wrong, they kind of go, right, fuck this is going lower. And then they get super bearish at the bottom in the same way that they get super bullish at the top. And then what happens is you'll get that sort of accumulation, and then you'll start getting impulses up, and then they flip, and then they're like, right, no, I don't trust this. Every time I've called a bottom and it impulses up, I've been smacked back down, and so I'm going to short it. Nope, this is the one to short. Nope, that's the one to short. Nope, that's the one to short. All the way up. Or not all the way up, but a large part of the way up, right? And it happens time and time again. Some of the biggest accounts on X do it. They did it in 2024. They did it in 2025. I watched it all happen. And then they can just obviously forget about it because they have these reputations for having big accounts and stuff. But those kind of people will start getting bearish down here, like super bearish. All hope is lost. And really, bottoms are formed when that happens. It doesn't happen when everyone's super comfortable and confident at calling it. There's too many people doing it. And I know it sounds counterintuitive. Oh, if everyone's calling for a bottom, it doesn't mean that, you know, it's just going to keep going down. But I focus on the price action. The price action so far is telling me it still wants to come down. If we start getting above 68K, I might change my tune a little bit, and I'll be very happy to buy back in there, because I sold 110K. So I'd have around about doubled my Bitcoin if I get to buy back in down here. But the market structure is still bearish as long as that level holds us down. And I was saying that last week when we shorted at 67K. If it gets above there, then I start thinking, I said 74K, but things have changed now. We drop back down. If it gets above 68K, then I start thinking, right, maybe this has bottomed, but the market structure is still bearish. And anyone who's getting bullish is like, you probably just need to zoom out a little bit, because we're still stuck in this range that we've been in since Friday. Just because it didn't go down and then ejected up doesn't mean It's just like we found a bottom, right? So they're my views on Bitcoin. And there's no hate or anything towards anyone, by the way. It's just if you're a market participant, you have to observe the other participants. And I don't really trust that when the general consensus amongst people is one thing, it always tends to be the other. Eventually everyone will kind of be right, but I just don't think we're there yet. I'm going to blow my nose and then get onto Ethereum. Any questions on that? Does any of that make sense to you guys? I had to make sure to like, no snot came out there so no one could see that. Right, what guy's saying? Who's here? Maximum liquidity bullish. Hold on, I can just get up this window. It's too small in there. Oh, is that working on YouTube? Let's have a look. Where's that all come from then? Kelly, hi. I just dropped a follow. How are you doing? Can you see my chat? I guess you can't see my chat. What? Oh, fuck's sake, it's a bot. Jesus. That's also something that makes me really like kind of like a little bit I've been thinking is all the bots keep coming back now on my posts and obviously everyone else's posts, which tends to happen like around when we get bullish. But it's all just kind of happened again recently. I'm not really sure what that is. Right, Ethereum. So if you've been following me, if you've been following me or you subscribed to me, or you've been watching these videos, you'll know that I don't put a huge amount of time into Ethereum at the moment because the price action is quite disgusting. It's really scrappy, low volume. It's offensive. It's that bad. And I've been saying, like here on H4, we've been going sideways at support. It makes sense for a reversal. But in the same way that we've got it on Bitcoin, we have a decision point here, which broke this key area. That is a key area because we have, if we go down to H2, maybe H1, we have like a compressed area here, and then we have an impulse down, and we've still got like another area of compression. So you can see it's kind of, we're in a downtrend, right? Then we break out the downtrend, and instead of continuing it, we create high, bounce off support, and then create a high deep into the compression up here. So that's a key area of buying, which gets taken out over here. Then we can look at this area here is where the impulse created this low, retrace up, but it doesn't come to the extreme of the level. And again, if you follow me or you keep watching these streams, I love you, appreciate you. You'll know I always talk about the extreme of the level, and this is where I think price is probably going to gravitate to. And here you can see this really clean range that comes down at the lows, tries to go down, spikes into the demand, breaks the high, comes back down into the range. But if you're looking at this is just a gamble then at which way it's going to go. Really low volume. Any big bid or big sell can just come into the market and do exactly this. It looks inorganic and it looks illiquid. So I want to see it come back up to here, ideally at about 1680, and then look to send it back down. It could also come up to these highs here at about 1655, but this is a more key area. If it does keep going, again, I find it harder to call on Ethereum because the price action has been so scrappy all of June. The next real key area for me, so we had this level here. Remember, if I just draw this again, we had the channel and then the impulse. And then instead of when it retraced to the bottom of the channel, you would expect it to continue, but it doesn't. It breaks to the upside, comes deeper into the channel, and you would expect it then to bounce because we've got an uptrend, right? We broke out of this downtrend, we're pushing up, we're breaking levels, but it doesn't. It takes it out, retraces, and it retraces to where the impulse created that level. I mean, it fakes it out, sure. It's not perfect. It's not going to be perfect every time. But it takes it out and then comes right back down, sells off. So this is a nice area. But once that uptrend is taken out, broken, we have this area down here at about 1731. So it's not clean. None of this is that clean. But if it breaks this level, then I've got my next level up there. And then if we break through this compression, because the extreme of it hasn't been tested. I mean, this has been an incredible short back at 1875. I was kind of hoping for it the other week up here, but it didn't make it. And then you'll see if you look at Bitcoin and if you look at Solana, it actually got to the deepest point of that compression and then broke down. I would think this is bottomed if we break 1875 to 1900, but also this is holding us down and it keeps the market structure to the downside. So again, I'm not looking for longs, even though we've burst out of this and it's going up. I feel like we're probably having a little bit of a suckers rally at the moment, and it's going to trap a lot of people. But my style is I now have to wait through the move for the exhaustion, and then look to sell that exhaustion. So that's where I'm looking. Or it comes down, breaks all of these lows. I would want to see it take out this demand, retrace, and then send it down. That's how I'd get short if we break down, or again, looking for the exhaustion at the highs up here. So I hope that makes sense. But obviously it's kind of following Bitcoin a bit. Solana, H4. So again, let's keep it there and then we'll go into it. Let me just take some of this crap off and then I'll bring it back afterwards just to keep things cleaner. So if we look at the daily time frame, this was the range that we put in for basically most of Q1 and Q2. How mad is it? We've got Q3 this week. So I used this low. Basically, this is where the candle closed for the bottom of that down move, retrace, tests the low, and then creates the range. And then I've used this wick as well, but this was like the kind of main area for me. And then we go down to H4. We can't see it on this time frame, but you can see I've marked the compression. And as I say, once you have this compressed channel, it's going to impulse up or it's going to retrace to the extreme of the level. So it doesn't impulse and now it retraces, but it doesn't hit the extreme of it. It doesn't hit the very extreme of it. So when it comes down, I'm like, well, that's interesting. And I hope there's people, some of you guys on here, my subscribers, that can vouch for me when I say this, that I'd been a little bit unsure because normally the extremes of these levels do get tested. And this is what it's coming up to do now. Now, if I go down, can we see it on H2? Yes, perfect. So you can see, right, we have all of this price action here. And then you get the clean impulse down through that range low. And then all of this is one channel. There's no clean impulse, but it's trending down. This is a clean impulse, right? This is a clean impulse. It just doesn't follow through. So I'm expecting it to come back up here. And I was looking for that. I think if you go through my profile a couple of weeks ago, you'll see that I said I want it to kind of top out here, and then I'll look for it to drop. But it didn't quite make it. And I thought, okay, this is either one or two things. The market is really that weak, or it's going to put in a fake low and then come back up to the highs, and then it's going to sucker everyone in, and then it's going to drop. Very similar to what it did here. Okay, back at $97, where it looked like it had tried to go. It looked like it was going to drop. It doesn't. Retraces back up. Can't drop, and then retraces back up. Gets everyone bullish, and then nukes it down. So I feel like we're in that part of this range now. So someone asked, Where was it? Was it on YouTube? Yeah, 829 ETH. Hi, Matt. Sol surprising you above 70K. No, it's not. I hope that's just answered all that for you. But I'd said this morning, and I'd marked this range out. Oh no, it was yesterday I'd said it. We have this range here, but we have that little decision point here. Right, this is where we have a downtrend, and then we have a retrace, and then it drops back down as if it's going to continue lower and follow the downtrend. But the buying kicks in, retraces, and then pushes up to create a higher high. So this area is in control and defining the intra-week market structure at the moment. This is where the buying has taken place to put the higher high in. It's respected it twice and then is now creating a higher high. Below $70 is where I would say right now we're definitely getting a continuation to the downside. And you'll see my tweet. I'd said Ansem's thing is making me bearish. His timeline is making me bearish. And we have potential third lower high, but below $70 would confirm that because this was the market structure defining level. It didn't break it. It wicked it and then came back up. So I still say we are bearish under 77, right? But above that, we're back in the mid-range of that previous daily time frame range, and it will try and reclaim the range. And then if it fails, then we're going to have an epic short down to $50. And then just to touch on that point I was talking about earlier, if you have that compression, price is going to retrace to either the shallow point or the deep point. And that shallow point lines up quite nicely with that range low, the bottom of the compression. But it is looking quite strong, right? And, you know, without even going into the fundamentals of so-and-so is like, I want to focus on the price action, but it's got to be said, right? There are people who have clearly been paid to pump the market, launch coins and whatnot. But we're doing it right into range highs. So even though I wouldn't have known that this dude or other dudes are launching coins, which brings the market back up, the price action, as I said, hadn't hit the extreme. Makes sense to me that it would exhaust at that point or come back and retest it. Because as I've said, something to do with market law. You can go on the clips on my profile. Something like market law, price just tends to gravitate towards these extremes. And if it doesn't get hit, and then this extreme didn't get hit on this move, we retrace, and it's going to look for the deepest area of liquidity, which is up here. And then if it doesn't, it's going to come up to, on this time frame, where the sell-off kicked in at about 81. This is where we impulse down to break the range low. So this is where the decision point is to put this entire swing down in, really. So again, we have that area, or we have overall this sort of area, which is the end of this entire compressed channel at $87. So I'm not bullish on Solana until that range high has been taken out. But the thing with this point is it's been tested multiple times already, whereas this level hasn't and this level hasn't. So I'm looking for exhaustion really sort of around this point, or somewhere in between, or maybe it fakes it and somewhere, because this is quite strong. But again, same reasons why I'm not looking for longs is what I was saying earlier, is the risk reward is not great up here. It's the top of the range. People get super bullish at the top of the range. At some point they will be right and will break out of the bottom and push up. I still don't think we're there yet. I might be wrong. but I feel like there will be signs somewhere along the way that this is going to come down. But below 70 is like where you'd get your confirmation that this is definitely coming down lower. Sorry for the cough. So yeah, that's kind of how I'm looking at Solana. But the price action, again, quite scrappy. It put in a nice-ish looking range high here compared to like this point. And this is where I thought it might go, and it's tested it and then it hasn't gone. So it might just be that we're faking out this range into the supply and then rounding off back down. Because I mean, do you trust people that are pumping coins to not rug their followers? Right? I don't. I trust that they will rug their followers. So looking for that basically, especially considering where we are in the market. In a full-blown bull market, I think it would have way more room to run, but at the moment, nah. So yeah, my plans, look for exhaustion up there, or maybe it comes back down into the range and then sends, but ideally, if it breaks this level, 70, get a retrace, and then start looking for shorts. Because again, remember what I said, people will see a low that gets taken out and then start buying it because they'll be like, oh, liquidity sweep and whatnot. But what this is actually telling you, especially as we're in downtrend, is that we've taken out the level, we're retracing to find more liquidity to send it back lower after taking out all of the liquidity at this point. And it's been tested 1, 2, 3 times already. So I imagine the next test of it, it will break. So they're my plans. Have to be a bit patient with my style. But yeah, I just don't really trust that this is an organic move and that it's going to last. Jeez, I've spent so long talking here about, but there's been a lot to talk about, right? I didn't want to spend that long. Hyperliquid, daily time frame. Takes out the previous all-time high. Sorry. Takes out the previous all-time high. Creates a higher high. But this is where the buying took place to break the all-time high. So it's that decision point. So again, when it's up here, and you can go back on my feed and you'll see that I was saying at $54 would make a really great long. And it comes back down and creates this wick above the previous high. So now it's kind of in the middle of this range, with the range high at about 75 and then the range low at about 54. We're mid-range at the moment in an uptrend. That's the key difference. Like Hyperliquid's in an uptrend, Bitcoin, Ethereum, and Solana are in a downtrend. So it's harder for me to call because I don't know if I trust, like what to trust on Solana. Sorry, on Hyperliquid. So it comes down, puts the buying in to create the all-time high. My apologies. Thank you for bearing with me through this illness. Buys the highs, puts in the all-time high, but along the way, because don't forget at this point we're looking bearish, we put this continuation pattern in. This is where the sell-off continued from this big sell-off, which after breaking the lows, retrace, and then creates a lower low. And this is where essentially it kicked in from, because this is a reaction. I've just marked the extreme level. Again, chapter 3, we'll talk about it. This is the whole level, and that's the extreme level, but it's bouncing off of that point. But this is where the sell-off created this low, and then it comes up and it breaks that level. If we jump down to H2, again, we can see the compression and then the impulse away. Comes back down to the top of the compression, the shallow part, and then it tries to push back up, ranges, and then drops through. And then where's it going to go? It's going to go to the deepest, the deepest part of the compression, which it does, but it breaks through it. So if I go down to the hourly, you'll be able to see the absolute end of that compression is down here. So to highlight the point, we have a clear impulse up, maybe M30. We have a clear impulse up, retraces, and then it trends up as a compressed channel. So that's the concept which I've been talking about throughout this entire video, basically. And now this is really difficult to, for me, in my opinion, to rationalize because it's just going sideways. It's quite ugly, right? It's a bit of a gamble about which way it's going to go. And it doesn't break any lows. It tries to here, but then retraces. So I had marked this, it was on H4. We were using this range here. And again, I've been saying to my subscribers, and if you guys are listening, you can go back to some of the articles, especially from last week, where I'd been saying like we had this one impulse down, but the plan was on H4 for it to come back into this range, top out, and then sell back down. So we might be seeing that move now. The bullish case, of course, if it takes out the highs, puts a higher low in and a higher high, then okay, we're going up to $100. So we'll see. So using that range as the map, it tries to go multiple times and can't. So it's now retracing to a deep area of liquidity, which I would say is probably around this range high. So I'm looking for it to kind of top out somewhere around here, or maybe even the mid range, and then come back down. But I want to see it break the lows here. If we see on M30, compression, impulse. So now it needs to find strength, the origin of that impulse, and then come back up. If it breaks through that, it's coming to the deepest part of the channel down here. And then it has a decision to make. Can it build to push back up? Or if it breaks through it, it's going to continue lower. So very key area to look at. And this is probably the best bit of price action we've had in this entire area. Here again, we've got the compression. It can't impulse down. It retraces back to the extreme. And you can see it taps it multiple times at the end of that chain and has now broken through it after like days and days and days of ranging. So I'm not really sure what to expect. I've been quite kind of unsure with hyperliquid, and I haven't really positioned myself because it hasn't done enough yet. But on H4, if it puts in a lower high and then maybe puts in a lower low like that, I'll be happy to like short this and then say it's going a lot lower. So yeah, they're my thoughts on hyperliquid, but I find it quite difficult to call this one because it's a different situation compared to the rest of the market, or it has been for the past couple of months, right? But the bullish case is that this does continue to build, takes out the highs, and then you can look to reload to send it higher. So we'll wait and see. My preference is to sit on my hands and just wait for more price action, but difficult read at the moment on that one. Right, I'm just going to blow my nose, have some water, and then we'll move on to section 2. Again, thank you for bearing with me through this illness. Right, let's read some of the chat first. Let's start with who's on X. Okay. Near and CRV. Yep. I will add them. XAI says, based on the system you've been trading and your experience so far, how profitable is it on a yearly basis, percentage-wise? That's a really difficult one to answer, simply because my risk percentage has always been kind of it's not been static, but if you look back on my profile, if you search for like my 2024 equity curve, that was like my I had my son at the end of 2024, and then last year, as I've documented on like all my channels, was like my hardest year in life, and my trading suffered immensely from it. I didn't trade for like 4 months or 5 months of the year, and I've struggled to get a consistent manner, not just in trading, but consistent with any of my usual day-to-day habits, including like going to the gym, doing some journaling, like going out for walks and that kind of stuff. And then in February is when I kind of stopped day trading, because I've been day trading, and now I'm moving back more to swing trading. And the thing is, with what I'm doing at the moment, at the big highs, like at 82K, I took a bigger position. Like I took quite a big position, like 5%. Whereas my day trading, I normally get in at about 0.4, 0.5%. So you have to do it more based on risk reward. And my typical sort of year, risk reward wise, ends up being at around about the 60, 70 R. And that's on my day trading. So it's quite a profitable system, especially when I'm on my A game and when I'm able to be at my best, which I haven't been for, like I said, now on like nearly a year and a half now. But I've managed, thankfully, to be able to keep my losses small as I take risks. Like in this current zone, for example, let's not look at hype, let's look at Bitcoin. In this current zone, for example, if I'm taking shorts, they're like 0.1%, and I'm looking to build a position when on a breakout, whereas I'm not going to go in at like 0.4% here. Like I said, if it comes up to 63K, I'll look to build another position sort of around the 2 to 3% mark. But I'm able to, like, one of the best things about my system is that I'm able to get big runners, and it's something I've had to build over time, which is, if you look at my YouTube channel, I've got a trading stop method, which is one of the ways I get to let these trends breathe. So let's say if we look at my previous trade, I've still got open 80,400, 80,500 is where my average position was for my last 2 big swing trades. And if you just trail above every high, you're not getting tagged out until like down here. So that's a good 5-6 R. And then if I just left it there, which I did, and then added another position there, I'm still in it. I could start trailing down here, and I might be like 7-8 R, right? And that's on higher risk. If I'm building small positions at 0.1%, for example, in that entire area, it's more like 5%. But if I'm taking like 0.1 R loss here, 0.1 R loss here, I took a 0.2 R loss here, that might be 0.5 R. So out of that 8 R on 5% risk, you're talking about like 30-40%, right? Minus 0.5%. So I'm able to keep the losses relatively small. They weren't my only losses here. Like I took another one there. I took a couple of break evens. I took another loss there, thinking it was going to break down because I jumped in too early. So I might lose 1% on the way up, but I might gain 30-40% on the way down. So that's like my profit factor, like my average profit factor from my trading year on year is about 2.07. It's quite consistent, actually, sort of between 2.04 and 2.07. So I'm able to sorry, I'm able to run these quite well, and that's, I think, the key to being a profitable trader, and certainly was a big change in my profitability, was being able to run these winners a lot further and then keep the losses a lot smaller. So yeah, it's difficult. But if you type in 2024 equity curve trader Matt on X, excuse me, you should be able to find my equity curve, and then there's a few more stats on there. But again, I've not been consistent with that for like a year and a half, and I feel like next year will be a really good year for me in terms of being consistent with monitoring stuff. Maybe even being like the rest of this year. But again, as I've been saying on all my socials, Like, I'm just trying to build my social media. That's my main focus, because I still have a day job, have my own business where I do graphic design. When I've had really, really good, consistent years, I was single, I didn't have a family, I didn't have a job, I had a stack of money behind me, and I was able to dedicate my and curate a lifestyle around around my trading, and giving it all the freedom to be successful. But I've had a load of shit come on my plate since the end of 2024. So yeah, like, at my best, it's a very profitable system. At my kind of medium, it's still a very profitable system. But the key to that is learning how to run the winners. And I really think, even if you only get 4 months of the year where you're able to run really big winners, and then you're able to keep your risk small for the rest of the year, and maybe take some losses and break even months and small winning months, that's how you do it year on year, basically. Does that answer it? Does that make sense? Because most people on CT are posting P&L postcards with good entries. Nobody is sharing $100 positions with 40x leverage. The whole 1% risk per trade doesn't make sense to grow a small port for someone. Small percentage gains makes sense on bigger size, Yeah, that would start depending right on your capital, which is why funded firms are like a really great way of increasing your size and being able to get bigger payouts, and then take those payouts and increase your personal account. That should be the end goal with it. But yeah, when people are posting P&L postcards on X, it's the same as when people post payouts from, like, payout certificates as well. You got to take it with a pinch of salt, because not everyone, but a lot of people are doing it for the engagement. A lot of people are doing it like a, hey, look at me kind of thing. And you should be able to tell based on their consistent posting and the calls that they get right, and not just like afterwards, but the calls that they put in advance. For example, when we were down at the lows on Bitcoin in February, I said, and my tweet is still up, if we retrace back up to 79K, I'm going to short Bitcoin down to 50K. I'm still in that short. But there weren't people saying that here. There were people getting really bull posting up here. And then we get the downtrend, and then suddenly the P&L cards come out. So you just got to take them with a pinch of salt, and just kind of be mindful of what they're saying ahead of time as well, putting their plans out there. But I generally don't really pay much attention to payout certificates and P&L cards, because I know they are mostly used for engagement. I'm talking with a funded firm at the moment, and part of what they have offered is to give me a funded account, whereas you might get 80-90% profit split. They're offering me like a 5% profit split if I do that account, but that account is mostly for social media content, right? And you won't see me posting P&L cards or what do you call it, payout certificates, because I just don't really like doing it. I think it's disingenuous. And then, because it's also like, I, for example, might have 4 or 5 really profitable months in a year, and if I'm posting payout certificates in those months, like on the red months, am I posting them? And if I'm not, like, you got to kind of wonder, like, okay, that you've got to say, right, this person is obviously like trading real, because they're not posting certificates, or they're posting P&L cards in those points. But I've had, like, in my best period of trading, I had 8 green months in a row, and then I had a small red month, and then I had another like 5 green months in a row, and then I had a couple of red months, a break even month, and then I start like building it back up. I'd been trading for like 8 years at that point, 7-8 years, which I think is kind of the sweet spot to understand where you are. But even people that have been trading that long, I don't think they've put the amount of work in that I have. It is an incredibly difficult thing to do. So if you've got someone like month after month posting these big P&L cards, then you just kind of go, I don't know if I trust you. Particularly people that, you know, have like not called big trades in advance and then suddenly they manage to catch them. But also the percentage on these things as well. If you've upped the leverage and you see a trade that says like 500%, 1,000%, it's not 500 or 1,000% of your account, is it? It's like on the leverage. So it may still only be 10 quid, 50 quid. So that's how they get it as well. You can just put some gambles on and post a card and look like a shit hot trader. But again, it might be a really small position. You might do several of them and then you just post like the one that runs. Or you can go on to inspect source and then change like on the back end, like the actual text on there, which is like a really typical tactic that people use. So just take them with a pinch of salt, yeah. Trade of on, yo, bullish, cool. Lala, hey mate, we need to talk. If you're still here, man, we need to talk about getting you on stream at some point. I think you were away for a while. I guess you're back now, mate. Good absorption at the lows. If we manage to break out the composite value of the last 4 days, I see 70k. Yes. 70k. Yeah, like I can see that. I can absolutely see that. That'd be a really nice retrace level. Because again, if I just go back to the absolute extreme of this, and I'm using the highest wick and the highest close within this channel, maybe M30, just to see if we can refine it a bit more. Yeah, we can refine it even more. There's the clean impulse. And then you have the channel. So the absolute extreme of that point, for me, using that high wick and the highest close, is at about 68k. I can absolutely see that being, you know, I would hate for that because I generally think if we're doing that, we're chopping around for the whole of the summer and then it's going to come back down. But can see that, or obviously like fake out a bit higher as it tends to do. But yeah, it's absorbing a lot of the selling at the moment, which is why I think we do get a retrace. But if we do start seeing new lows now, or over the course of the week breaking this range, then I think, yeah, you know, we can look for continuations. But yeah, I agree, man. Chances of gold chart. Unk has 2800 target. What you think? All right, we'll look at that in a moment. Brazil or Japan? I'm going to go for Brazil. I love Japan and I want to live there one day. And I love Japanese people. I love Japanese culture. But Brazil was the superior football team. I agree. It gives small traders a sense of delusion. Yeah, like just ignore them. Like I think, particularly when it comes to small accounts, when the small accounts or like medium size accounts, 5 to 10k, sort of 5 to 15k followers, post them regularly. I'm just a bit like, I don't trust you, and that's something that I've always seen throughout different cycles. Right. Any comments on YouTube? I'm okay. Soul surprising above 70k. No, mention that. Thanks for your video. Thank you for watching. Solana is such a scam coin. Yes, it is. Hey Matt, do we think we get a bullish July? Cheers. Would be nice to get 70k retest. Yeah, maybe. I mean, I'd hope not, but maybe. This is certainly not going down, is it? Okay, right. Next section, and we've been an hour and 10. I normally do these about an hour and a half, so I need to get my skates on. So LFG YOLO's asked for near. Eesh. There's got to be a pair exchange and Bitstamp for that. Maybe Coinbase. There we go. That looks nicer, doesn't it? All right, let's do some quick TA on this. So when I look at a naked chart, the thing that I want to look at is just big areas that stand out to me. So we can see here, we have a big area of compression, big range. So I'm going to mark the extreme of that up here. And then we're going to backwards rationalize it to see if it's important. And yes, it is, because it takes out this low here, this really big low. 1 second. So this low is important because it's where we have a downtrend. And then from there, where the buying takes place to create a couple of higher highs and some higher lows, and then a higher high that looks to try and take the all-time high. And then it comes down, and then it ranges, and then it breaks. So this is a key area. We know there's some selling interest there. Oh, dude, it came all the way down here. Crazy. Right, so it's come all the way back down to the lows. Bounced off of it. And then we've got this big range here. We have these lows. Oh, shit. We have these lows, which are holding us up. You can see price comes down, bounces, tests it, bounces, tests it, bounces, and then finally breaks through. And then sitting on the edge of that break is this level here. So finally, on the third attempt, some selling kicks in to break the low, and it's from this area, and then it didn't get hit until we get this rally. So using the concept I talked about before, a decision point where the buying took place to break that high, that key high, we have here. So from this point, the buying shoots up to create the high, break through a key barrier, and is now retracing down. So if it comes down to about 1.5, it's a nice looking area to buy. Would I personally buy it? No, because I don't trust shit coins, especially in the bottom of a bear market. But the thing is with altcoins and meme coins and stuff, you never know where the volume is going to come from, because with majors, they're always being traded and people are always buying it. With things like this, I just don't trust that they are something that, like, it comes down to a key level and then it can just dribble down, even though this is like technically a really nice level from a technical analysis point of view. But that's up to you and your risk and stuff, right? So that's a really nice area. If it starts creating a higher high, so it might, let's say, for example, comes up, creates a higher high, somewhere along this point, maybe there, in the same way as we have this level, we'll see an impulse up that breaks that high, and then on a retrace down to it, that's where you want to look to load up, because you've got a signal from the market that it's coming higher. So that's how I would look at near. And then the other one was CRV. There. This is what I mean, right? They just dribble. I don't know if I'm going to do any TA on. Is this the right one, mate? Is this the right one? I don't know if I'm going to do any TA on that, but on the weekly chart, it's at extreme lows and there's no volume in it, right? These are the kind of coins I would look at where you just chuck like maybe a couple of hundred quid in, if you've got that to spare, and hope for this type of move out. 400-500%, yeah, 5 extra money. It's not the type of thing I'd look at and go, is it going to come all the way back up here? Maybe it does, maybe it does over the next few years, 4,000%. But I've bought many coins like this over the years, which look totally bottomed out, thinking, right, yeah, it's got so much upside, and when the next cycle hits, everyone's going to be buying it, and then no one does buy it. But it's one of those ones, if you want to punt it, it's right at the bottom, isn't it? So yeah, that is the right coin, yeah. Okay. Loads of bots. They're showing up in the chat, the live chat, but they're not showing up in the actual X chat, which is quite annoying. Thank you. Your insights are really helpful and help my logic. Thank you. Thank you for being here, man. Like, I'm very happy to give the content as long as I know what content I need content to make. So if you guys ask questions, it's great. Right, next chapter, I'm going to move on because we've been here an hour and 15. I'm sick. I don't want to be here for 2 hours. Next chapter is about how to draw supply and demand zones. Let's use the weekly or daily. Should we use this chart? Okay, yeah, let's use this chart, 4 hourly. So, fuck off trading view. So just, I'm going to do this relatively quickly and try and skim through it. How to draw supply and demand zones and how to trade them. Again, I'm just going to shout out, if you go into Kraken's YouTube channel, you will see my full series on this, and it goes from understanding the fundamentals of supply and demand, as in like what drives the market, down to what candlesticks to look out for, max pain level, what supply and demand zones are important, and then how to avoid fake outs, what are genuine breakouts, all this kind of stuff, which like expanded on my initial videos, which I made on my YouTube channel last year. How to build a price action strategy for beginners, intermediates, and advanced. That's on my YouTube channel. You can see them and basically get that. But the Kraken ones are a little bit more detail, a little bit more chart work, and better editing. So essentially, right, you've got a demand zone. Is price goes sideways and then breaks out to the upside. A supply zone goes sideways and breaks to the downside. You can have that in a downtrend, or you can have that in an uptrend. Doesn't really matter, but we're just focusing on where price goes sideways and where it breaks out to define that zone, right? So when I'm marking them live, if I'm watching it on M1, for example, you might see an impulse and then a retrace. It might just keep going down, in which case, obviously, you're not going to get a level. But once it comes back up to test this trend high, I'm using that low before the high gets tested again, and I'm using the original high. That's now my range. That's now my, like, what I'm watching. If it keeps going sideways and then bursts out of it, that is my demand zone. And then similarly for a supply zone or this kind of range, bottom of the trend, retrace, and then the retrace high before that low is tested, there's my range. That's how I'm defining things, and it breaks out, okay? So the way that I mark a demand zone, let's find a really clean one. Here, let's try to find a few of them, right? But again, you can go on Kraken's video and you'll get this in way more detail. So we have the impulse up, the retrace down, and then the test of that initial high. So I'd mark my demand zone like that. And you can see we're in a very strong trend, and it's only spending time at the top of it and then trends away. Again, here we have an impulse up, and then with the high, and we have the low, and then we have the test of the high to confirm it. And then you can see after the breakout, price just kind of spends a bit of time at the top of the zone and then shoots away. Let's find a supply zone. Trying to find clean versions. Okay, again, here we've got another demand zone. Price pushes up. Use the top of the trend and then the low, and then you can see exactly how price behaves after that breakout. You can use that zone, right? Here again, up, down, up and away. And then here's a couple of supply zones. So we push up, hit the high, test, create the low, hit the high again, and that confirms our range. And we know it's now a supply zone. because it drops to the downside, tests it, and then drops, tests it again, and then drops. And then again, we have another supply zone here using the exact same way of drawing it. Get the trend up. And then we have that low before the high is then tested again. It can be tested or it can be broken. And then it drops down, tests it, drops down again. So it's not rocket science, to be honest. But once you're able to mark them quite cleanly, you'll see how powerful they are. And then just some continuation zones. So we have, again, the drop, the retrace, and then it continues, and then the tests over here. Drop like this. Sorry. And then it retraces to the high, and then comes down to test it at this point here, actually. And then you can see breaks it, tests the absolute high of it, and then drops through it. So that's how I mark them. I have a concept called max pain level. I'm just gonna have some water. So let's find a clean one where we've been retested, because then it will make a lot more sense. Okay, here's a good one. So here we have an uptrend, we have the low, and then we have the test of it. So that's our demand zone, right? This is a huge area. How do we know where to trade it? Now, if you look back at those previous examples where I said when we were trending up, it puts in the demand zone and kind of spends a bit of time. So you have the breakout, and then it spends a bit of time at the top and then goes. If you're in a trend, you want to look to the shallow part of that level. If you're now looking for a reversal, you want to look to the extreme of the level. This is a kind of a weird example, not a weird example, but uncommon in the trend up. So I'm going to use at the bottom of that demand zone the lowest wick and then the lowest close, and it looks like that. So when price is up here, it comes down to the extreme, and there you get your best risk reward. And if it breaks that level, you know it's going to head south and you can get short. See if we can get another really clean example. Maybe we go down to the hourly and we can find one. Yeah, it's kind of hard. Again, this is when it's trending. We have a supply zone here. And this is what I mean. We're trending down, and it's spending time at the shallow part. So that's where you want to kind of focus. But now on the way back up, let's say to 78K, I'm just going to mark the extreme of it. The highest candle, highest wick. We have the trend down, the retrace back up to the high, and then we come down to confirm that we have a supply zone. And you can see again, once it's bigger like that, but on a reversal point, I'll be focusing on there. And again, where is it? Where was that compression? Yeah, here we go. Really nice area. It's not as clean as some of the examples, but we have a trend to the downside, and then you can see it kind of goes like that. So that's the low, and then I would mark it like that. It's not perfect. It doesn't always have to be perfect. You can kind of just eyeball it and see how it looks. But instead of taking that whole zone, I would just mark it at the top, at the end of that channel. Going back to what I was saying earlier in the video, if you have a channel, this is dog shit, sorry. If you have a channel like so, you have an impulse down, it's going to come to the lower part and a trend. or it's going to retrace all the way back up to the extreme. So I'm just going to mark the extreme. It looks cleaner, or just the bottom again, so I don't have these big, like, fuck off big boxes. And then you can see it's come up relatively close to the extreme in this example. Maybe Solana has quite a nice thing. Yeah, like here, for example, this is all one big chain, but I'm just marking max pain level. And for some reason, I think it's liquidity based, it tends to gravitate towards those zones. And that's kind of where we're heading now. So that's how I mark them. That's how I mark supply and demand zones. Keeps it fresh. Here's another great example, right? So the entire zone is probably like that, but I just want to mark the very bottom of it, because I know now if it's coming back down, it's coming back down to the extreme of that point, because we're in a downtrend. We're in a high time frame downtrend. But on an intra-week or intraday trend, it's coming right to the top of that level. So I hope that makes some sense. It does take some practicing and to get used to it, but it's a very powerful way of marking things, just as technical analysis. And the extremes of the levels is where you're going to get the biggest reaction. So it makes more sense to, trade in those areas. With that logic, here on the weekly time frame on Bitcoin, we have the uptrend, we have the high of that trend, and then it gets tested up here. So we technically, that is our entire weekly demand zone. Like so. I think the absolute top is there. And then because we're trending up, it retraces and comes just about excuse me. It comes just about to the top of it and then bounces. And then on the way back down, because it's tested that area already, it's not bouncing off of it. It comes lower for the liquidity, comes to the mid-range, bounces, and now sinks down. Why is it going to bounce here and create a higher high? Maybe it does, but generally speaking, it's going to come down to the extreme of it. And it's coming down, if we mark max pain level, bottom wick to the bottom close, takes us to about 54K down to about 49K as our zone. And then you can look to go to a lower time frame to refine it just a little bit more, down to about 53K, 52K. So that's how I mark them and how I trade them. So on the way up, I want to look for the shallow part for a bounce to continue the trend. But if that breaks, I'm looking for the deepest part, which is why I still am a little bit more bullish than others. Sorry, a little bit more bearish than others, because I don't think that extreme's yet been hit. And in the case of Solana, for example, the extreme of that level didn't get hit. Extreme of this level didn't get hit. So it's retracing back to where? The extreme of the level. So that's why I then say I'm going to look for exhaustion here or the next point, rather than getting long, because I know that level is likely to be an area of big selling liquidity. Okay. Any questions on that? All right. I will get to that. So last part of the stream, I had said it's about, I forgot again, sorry. Just get it up. I need to find the right tab. Something about sitting on your hands. Occupying yourself when there are no trades. It kind of goes back to what I was saying earlier. I mean, going back to Bitcoin, right, where I said I take smaller positions. I take smaller positions in areas like this where I am not too confident in a continuation. but still want to like take the chance that it might follow through. So I take smaller positions, and that's my way to uh, have some exposure without having a huge amount of risk involved at points where I'm not confident and there's not a lot of conviction in that part of the chart. But in these choppy time, to save yourself, when you see smaller candles and that stuff, you got to be doing other things with your time, particularly if you're swing trading. If we end up having a really choppy summer, for example, you don't want to be getting chopped to bits and not having any powder left for when things start kicking off, and you don't want to like take massive hits to your account or to your funds, knowing that we might get a really big move to the upside. So some of the things you should be doing if you're trying to occupy yourself away from the charts, there's nothing to do, and you know there's nothing to do. And I think everyone really who has been trading a fair while will know at points like this that there's nothing to do. Even though you can create plans, and even though you can look at the charts and say, right, if it does this, then I'm going to get in, and make logical decisions based on, or logical plans based on your edge. When they don't appear, you can sometimes, if you're chart watching, try and have a little nibble, which ends up 2 or 3 nibbles, and then it's like ends up to be a revenge spiral. It certainly has done that for me anyway, and I'm sure it has for many others. But the way to do it is set alerts. Set alerts for when certain points break, so you know when to get active, and then go away and do something else with your time. Backtesting is a really good way to scratch that itch. It's a really good way to feel like you're doing something and working on yourself and working on your trading, whilst not actually hacking away at your account or taking shit trades for the sake of it. But as traders, we feel like we want to be active, especially when we've come from like working backgrounds of 9 to 5, where we know that where we feel like we have to be productive, we have to be doing something to feel productive, in order to feel like we're moving forwards, which is not the case with trading. A lot of it is just waiting and making plans that don't actually come to fruition, and just waiting and waiting and waiting. But backtesting is a really good way to scratch that itch. Setting alerts is a really good way to pull yourself away from the charts and know that you're not gonna balls it up until you get that plan come. Or, like me, create content online, especially around trading, even if it's just for yourself. I think one of the best things you could do as a trader in these days is maybe set up a private YouTube account, and or a private X account or a private Discord, and get used to like creating content and creating plans. I think it's a really good way of making extra money and connecting with people, which is why I'm doing it. I had a 4-year break from it, and then I came back, and because I knew I wanted to connect with people, I knew I wanted to make money on social media. There's a lot of money to be made on social media, and that takes a lot of the pressure out of trading. So where I haven't traded today, for example, because I didn't get a trigger for my plans, I know I've been working, I've been doing social media stuff, I'm doing this now. All of that is like bringing you forward in a way that if you feel like you have to take a trade to move forward, it removes that feeling for you. So you got to do something with your trading. Backtesting is the best thing. I think it was Popeye who had said earlier. I'm gonna have a look on his page, and so I don't bodge it, because it was a really good point. I think it was that, or it might have been Trader Confessions, but I feel like it might have been Popeye, because he creates really good content and observations like this. But I just want to check. It was either that or Trader Confessions. I think it might have been Trader Confessions, actually. Yeah, Trader Confessions. Let's have a look. Is it Confessions? I'm going to bring it up on screen in a sec when I get it. Aha, here we go. Can we see this? Yes. I've talked to so many unprofitable traders over the years. Most of them have been doing it for 2 to 3 years. Almost none of them have 500 backtested trades. They add/take away things from their strategy without actually testing or checking the data first. Trading is a joke to these people. So many people say they want to become traders, then put absolutely zero effort into it. They just watch YouTube videos and break the rules every day on a system that they don't even know works in the first place. So if you're not able to get any trades on this day, why can't you get on a back tester and go and take like another 20, 30 trades? It goes back to what I was saying earlier. I feel like people haven't, like, I feel like I've put in a huge amount of work. When I said about having all those green months in a row, it's because I put a huge amount of work in, and I've put thousands of reps in on my back testing software and thousands of live trades as well to complement that. But if you haven't, and of the same thing, of the same strategy, of the same edge, you need to be back testing. People shit on it, and like, I think it's a really key part of trading. You know, if you're playing football, you do football training, you practice your free kicks so that when you play the actual match, you know, you've got the technique right, you've got the feel for it right, you've got that muscle memory in your head to know how to kick it up and over the wall and into the net, right? How to beat the keeper. Sorry. From different positions as well, where you take that free kick. Why is trading any different? If you're lifting weights, if you entered a weightlifting competition, it's going to do deadlifts, you're not going to just not practice and then just turn up on the day and try lift that really heavy weight. You're going to practice and build up to it. It's the exact same with trading, but people are lazy with it because a win in trading is just a click away. You could look at this now and show anyone, just buy and just wait, and then it goes up, and you're like, oh shit, I made money. Why do I need to do that back testing? It's that easy. It's that simple. But for longevity, it's not. And it also goes to that point about the P&L cards and everything, right? Is it a repeatable system? And that's the way to be profitable with trading. So you need to just do a little bit of work, and particularly in these environments, sometimes it's not, oh, I'm just going to find another chart and see what's moving. It's getting the reps in. So I say you need about 1,000 live reps to have any kind of understanding or mastery of your edge and of your system. But you can get way better live reps by practicing on the simulator. If you're really passionate about making money, if you're really passionate about making trading work for you, you will go and put the work in, and that work is back testing and then journaling those back tests. Something I've been talking about a lot recently is automated trading, and that is an entire process as well. You have to learn what works. You don't just go, right, I'm going to take a breakout trade and just automate that. You have to understand where and when. You have to understand how to code that, how to like put that entire puzzle together. It's the exact same in trading. Even though it's as simple as price goes sideways, it breaks up, I'm going to buy it. That's like the core concept of it, but you have to build on that and understand where you do those trades, when you do those trades, what markets you do those trades, and when to sit out of those trades as well, right? Or look for the counter, look for those setups to fail and then go the opposite way. But you will just create negative habits and negative mindset by looking at this and going, I want to trade, it's not good enough to trade. But backtesting was a really great way to scratch that itch. Right, I'm going to end it there because I'm suffering. We've been doing an hour and 40, and we've covered loads of shit in this stream. I hope you've learned from it. I hope you found it useful, and I hope you can take away something from it that you can action, and hopefully not my cough that you've caught by watching me and listening to me. So thank you guys for turning up and asking questions. I really appreciate that because that helps me with these streams. And I will see you tomorrow. If you want daily updates from me, hit subscribe on X. I do videos like I did on the public video this morning. I do them morning and evening, Tuesday to Friday. And then I do articles. I basically summarize what I've said in those videos as an article, again, every morning and every evening. for Bitcoin, Ethereum, Solana, and Hype. So hit subscribe for that. On Thursday, I'm not doing a stream on Wednesday because my guest, who is Tim from Think Money, if you know David Bell, you know Think. Tim's coming on Thursday because he can't do Wednesday. So on Thursday, I'm going to be talking to him about trading and investing in the stock market. So yeah, that'll be the next stream. So I hope to see you there as well. Otherwise, happy trading week, and I will catch you on X, no doubt. And enjoy the rest of your day and evening. All right, guys. Thank you. Bye.